Stock Daily Insights. Your daily market compass.
Today, September the 16th, Monday, after a strong rally last week, U.S. markets opened with a pause in momentum. The three major indexes saw narrow trading throughout the day. Despite weakness in Apple and chip stocks, optimism surrounding the Federal Reserve's expected interest rate cut later this week supported the market. By the close, the S&P 500 and Dow Jones finished slightly higher, while the Nasdaq ended with a minor loss. Meanwhile, the two-year Treasury yield, sensitive to policy expectations, dropped to its lowest level in 2 years. Wall Street's biggest player, JP Morgan, remains confident that the Fed will cut rates by 50 basis points this week, leading bond traders to increase their bets on this outcome, pushing expectations beyond a mere 25 basis point cut. Earlier in the day, the probability of a 50 basis point cut was as high as 65%. Just a few weeks ago, markets feared that such a large cut might signal panic and recession risk. But recently, the narrative has shifted, with many now believing that a substantial cut could inject vitality into an expanding economy, achieving a soft landing. The ongoing debate leaves many wondering if Wall Street is pushing the Fed into cutting rates by 50 basis points, or if the Fed itself, through its trusted communicator Nick, is quietly signaling its intent ahead of the election. This uncertainty has heightened market anxiety, especially about the risk around Wednesday's rate decision. The S&P 500 is nearing its mid-July record high of 5,670, with daily movements climbing steadily, though trading volumes are gradually decreasing. This suggests that institutional investors are cautious, unwilling to make significant directional bets ahead of the rate decision. According to Morgan Stanley's brokerage team, hedge funds have reduced their net stock exposure to the lowest level since the end of last year. Additionally, Deutsche Bank's data shows that investors are piling into defensive sectors like utilities, consumer staples, and real estate. At the same time, exposure to tech stocks has dropped significantly from record highs in July to just above average. Both institutional and individual investors are holding their breath, and there's a good chance the Federal Reserve is internally divided on what to do. Tomorrow's pre-market retail sales data could still sway the Fed's final decision. Some analysts believe that if the data comes in far weaker than expected, it could push more Fed members to support a 50 basis point cut. The options market is pricing in significant volatility for Wednesday's Fed decision. S&P 500 options suggest a 1.2% swing in either direction after the announcement, the highest implied move since the March 2023 meeting during the regional banking crisis. However, I believe this 1.2% expectation might still be underestimating potential market swings. Since early 2022, the S&P 500's actual intraday movements on Fed decision days have consistently exceeded what option strategies anticipated. A move of over 2% wouldn't be surprising. Today, the QQQ Nasdaq 100 ETF dipped slightly, testing its 470 support level formed by the convergence of multiple moving averages before bouncing back. However, it's hard to take technical analysis seriously at this point. 1 minute you're analyzing trends, and the next, everything is thrown out the window as soon as Fed Chair Jerome Powell starts speaking. My advice, just like last Friday, is to hold off on making any big bets for the next couple of days. The bull market isn't going anywhere, and it's better to wait for Wednesday's rate decision before jumping in. Citi strategists believe that if the Fed cuts rates by 50 basis points, investors may be forced to rush back into tech stocks even before the election, rather than waiting for post-election clarity. Aside from whether the Fed cuts by 25 or 50 basis points, the Fed's dot plot, which signals its future rate expectations, along with Powell's comments, will play a crucial role in determining how the market reacts. While U.S. stocks were steady today, the cryptocurrency market, often seen as an indicator of risk sentiment, saw widespread declines. Bitcoin fell 3%, despite it often benefiting from rate cuts. This price drop indicates that investors' appetite for risk might not be as strong as it appears on the surface. It suggests that only a small group of traders is betting on aggressive rate cuts. Wednesday will reveal if the truth lies with this select group of speculators. Following the Fed meeting on Wednesday, the Bank of Japan is set to hold its rate meeting on Friday. Traders expect the BOE to keep rates unchanged, but the narrowing interest rate gap between the US and Japan has pushed the yen to its highest level since July last year. The impact of yen carry trades on US equities has lessened since early August, when those trades were largely unwound, but the yen's strength is notable as the S&P 500 approaches its all-time highs again. The BOE's meeting on Friday will likely have little effect on US markets, provided the market mood remains positive. However, if the Fed doesn't deliver a dovish surprise on Wednesday, and the BOE hints at continuing to raise rates, it could seriously dampen market sentiment. This is more about the psychological impact than any real market shift. Today, Apple stock took a hit, opening with a gap down and losing over 2%. According to well-known analyst Ming-Chi Kuo, pre-orders for the iPhone 16 series over its first weekend were estimated at around 37 million units, down 12.7% from the same period last year for the iPhone 15. The lower-than-expected demand for the iPhone 16 Pro models, especially in China, where Apple's I feature remains restricted pending government approval, is believed to be a key factor. Despite Kuo's belief that the supply chain won't see major short-term changes, with the holiday shopping season in the US and China's Singles Day, Double 11, sales likely boosting iPhone 16 numbers, Apple's stock decline spread to chip stocks. Broadcom, a VGO, a key supplier for Apple, dropped over 2%, while Micron Technology plunged more than 4%. In Micron's case, this wasn't just due to Apple. Morgan Stanley analysts issued a cautious outlook, noting that while memory prices are still rising, supply has caught up with demand, and the memory market cycle is nearing its peak. They expect profit growth to hit its peak soon, followed by a reversal, projecting a 30% decline in Micron's price-to-book ratio as investors adjust their positions. As a result, despite maintaining a hold rating, Morgan Stanley cut its price target for Micron from $140 to $100. The Philadelphia Semiconductor Index, SOX, dropped 1.4% today. After the significant run-up in chip stocks earlier this year, many of these stocks are now seen as overvalued. While today's drop in Apple and chip stocks can be linked to specific news events, the broader sector's downturn ahead of the Fed's decision reflects deeper concerns. Investors are rotating out of high-priced chip and tech stocks and into blue chips and mid-cap stocks, reflecting a more defensive posture as uncertainty looms over the rate decision. It's likely that the SOX will continue consolidating near its 200-day moving average before the Fed's decision on Wednesday. One notable exception to today's chip stock slump was Intel, whose shares surged in contrast to the broader market decline. Reports surfaced that Intel is eligible for up to $3.5 billion in subsidies to manufacture chips for the U.S. military. This funding could be announced as soon as next week, giving the company a significant boost. Intel's situation is reminiscent of Boeing's in recent years, once a giant, now often seen as a relic. Although Intel's internal management has been heavily criticized, and its earnings have taken a hit, the company remains politically influential. The U.S. government doesn't want to see Intel fail, given that it's America's only major chip maker. While companies like TSMC and Samsung excel in chip production, they aren't US-based, which keeps Intel in the game despite its struggles. However, military contracts aren't exactly a gold mine. Historically, chip makers that work with the Department of Defense have found it difficult to meet the stringent requirements and have struggled to turn a profit from these deals. Many avoid them altogether. Intel might not make huge profits from these orders, but its political ties are what will keep it afloat. The U.S. Secretary of Commerce, Gina Raimondo, has been actively promoting Intel to companies like Nvidia and Apple, encouraging them to use Intel for chip manufacturing. Before a recent investor meeting, Intel CEO reportedly had private discussions with Raimondo, stressing that America relies too heavily on TSMC, and the US must support its own. So, for Intel shareholders, the message is clear: don't lose hope yet. There's a chance the government's lifeline could bring the company back to profitability. Google, or Alphabet, is now considered one of the cheapest of the Big Seven tech giants by valuation. Its forward price-to-earnings ratio for the next 12 months sits at around 17.5x, which is the lowest it's been on record for the company. In comparison, the broader S&P 500 is trading at a forward P/E of about 28x. Clearly, the market is pricing in the risk that Google might face business breakups due to increasing antitrust pressures. Despite these concerns, most analysts don't believe Google will be forced to break up. Instead, they expect the company will face other penalties or regulatory changes. With Google's current valuation and cash reserves, which rival Apple's, holding on to the stock seems reasonable. Even if the broader market experiences a significant downturn, Google's downside appears limited. At its current valuation, even during market stress, Google's stock has less room to fall compared to more expensive peers like Apple. Not to mention, Warren Buffett's ongoing stake in Apple adds another layer of market psychology that might cushion its fall more than others. However, military contracts aren't exactly a gold mine. Historically, chip makers that work with the Department of Defense have found it difficult to meet the stringent requirements and have struggled to turn a profit from these deals. Many avoid them altogether. Intel might not make huge profits from these orders, but its political ties are what will keep it afloat. The U.S. Secretary of Commerce, Gina Raimondo, has been actively promoting Intel to companies like Nvidia and Apple, encouraging them to use Intel for chip manufacturing. Before a recent investor meeting, Intel CEO reportedly had private discussions with Raimondo, stressing that America relies too heavily on TSMC, and the US must support its own. So, for Intel shareholders, the message is clear: don't lose hope yet. There's a chance the government's lifeline could bring the company back to profitability. Google, or Alphabet, is now considered one of the cheapest of the Big Seven tech giants by valuation. Its forward price-to-earnings ratio for the next 12 months sits at around 17.5x, which is the lowest it's been on record for the company. In comparison, the broader S&P 500 is trading at a forward P/E of about 28x. Clearly, the market is pricing in the risk that Google might face business breakups due to increasing antitrust pressures. Despite these concerns, most analysts don't believe Google will be forced to break up. Instead, they expect the company will face other penalties or regulatory changes. With Google's current valuation and cash reserves, which rival Apple's, holding on to the stock seems reasonable. Even if the broader market experiences a significant downturn, Google's downside appears limited. At its current valuation, even during market stress, Google's stock has less room to fall compared to more expensive peers like Apple. Not to mention, Warren Buffett's ongoing stake in Apple adds another layer of market psychology that might cushion its fall more than others. Thank you for watching today's market update. For more insights and daily stock market analysis, don't forget to subscribe to our channel and turn on notifications. Share this video with others who might find it helpful, and leave your thoughts or questions in the comments below. See you in the next update.